We're now going to begin our next session, which is on investment opportunities in the food and travel sectors in the Islamic economy. This session will explore success stories and investment opportunities in the high-value and fast-growing halal food and travel sectors. To moderate this session, I'd like to introduce someone who has spearheaded insightful research that has helped define the Islamic economy space. So I'd like to introduce my colleague and CEO of Dinar Standard, Rafiuddin Shiko.
Assalamu alaikum wa rahmatullahi wa barakatuh. May peace and blessings be upon all of you. Ladies and gentlemen, it is going to be an exciting session. I'm quite sure. We had a very lively discussion before we gathered here together. And the topic, as you're here, I'm sure, are interested in all this buzz about Islamic economy, but is there real money? Is this a real investment opportunity? How real is this thing? So I think we're going to get some real answers today, inshallah, in this session. The session is going to focus on the food and travel sector investments. To start off, to give you a little bit of a context as a reminder, of course you would have with you at this event the Global Islamic Economy Report that details out the landscape and the potential and so forth. But to start off with a couple of key points. Today, the global Muslim consumer spending on food and beverages is about 17% of the global spending, which is more than $1.1 trillion as of 2014. This is the Muslim consumer spending. We don't know how much of that is, all of it is halal certified and so forth, but regardless to say, a big portion of that today we know, and there's a big push towards it becoming halal. So it's halal relevant, that market size. The second aspect is within travel industry today, about 11% of the world's spending on travel and tourism is from Muslim tourists. And this does not include their travel to Hajj and Umrah. This is just purely vacation and other business travel and so forth. So it's travel and tourism, which is about $140 billion of spending in 2014. Another key aspect is both these sectors, the Muslim consumer spending is one of the it is faster growing than the rest of the world year on year, projected and in the past 5 years we've looked at. So knowing these numbers, any investor, any business entrepreneur would say, well, sounds like a great opportunity area. So, however, we've seen very little investments. We're just starting to see some interest in transactions, and we'll share some numbers later on. We have with us an amazing group of panel, and they represent a variety of areas that will be relevant to our topic. First of all, we have His Excellency Marwan Al-Sarkal, CEO of Shuruk and Sharjah, UAE. We have I'm sorry, I should have started with Simon, but His Excellency, it's fair. Mr. Simon Coombe, who's a CEO of an amazing hotel concept, a successfully growing hotel concept called Shazza Hotel, and he'll bring a tremendous amount of perspective from his experience and that story. We have to His Excellency Marwan's left, Mr. Muhammad Abul Ghaib. He's the Managing Director of Financial Services of Pioneers Holding in Egypt. So he will also, and Pioneer has done some very interesting recent transaction in the food space, as well as their other experiences in Egypt. So he will be bringing that experience. And finally, we have Mr. Amir Rahman, Managing Director of Fajr Capital, which is a DIFC-based global Islamic private equity firm. So welcome our panelists, please, and inshallah look forward to having a good discussion with all of you. What I'd like to do is, perhaps if Simon, we can start with you, but go around. If you could just give a 2-minute introduction for the audience, so those of them that don't know about Shazza and your project, just if you could describe a little bit, perhaps even if you'd like to mention a little bit about yourself, and then we'll go around, have everyone introduce the projects. Thank you.
My pleasure. Assalamu alaikum. I'm Simon Coombs, CEO, President of Shazza Hotels, as Rafi's already introduced. Our concept was formed in 2006, and it's the foundation for the brand is very important to understand. It was quite visionary at the time, especially when you hear about the numbers that have just been quoted to you, what the market potential was or is. And at that time, we foresaw that there was a great opportunity to create a hotel brand that catered specifically to the needs of the Muslim traveler and the region. And Shazar Hotels was formed out of that vision and that need and that market opportunity. We were formed as a joint venture with Kempinski Hotels, which becomes a very important point for other elements of our discussion, and backed by a sovereign fund out of Qatar. By my background, I was formerly the executive vice president of Kempinski. Prior to that, I headed up the finance function for Hyatt International for about 17 years. So a finance person now moving into a more visionary role, I'd like to say.
Great, thank you so much. Marwan, if you could.
Thank you. Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. Maybe at the beginning I would like to especially thank Dubai Chamber of Commerce for giving us the opportunity to know more about the Islamic economy and how important it is. And I think to the level that what we have seen today makes us very proud that we are hosting such an event in the United Arab Emirates and especially in Dubai. I am the Chief Executive of Sharjah Investment and Development Authority, an authority that was created in 2009 with an Emiri decree by His Highness the ruler of Sharjah, with the main objective is to attract investments to the Emirate of Sharjah, opening up Sharjah to foreign investors and developing projects. So we actually are the entity that promotes Sharjah internationally. We promote Sharjah as a land of opportunities with great growth rate and a very dynamic economy. However, we also develop our own projects. So we've been developing projects since 2009, amazing projects in the Emirate of Sharjah, destinations that are a place to visit, that are unique to our identity. Thank you.
Thank you so much for the introduction. Mr. Mohammed Abul Ghaid.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum. My name is Mohammed Abul Ghaid. I'm currently the Managing Director of Financial Services at Pioneers Holding. Pioneers Holding is mainly an Egyptian investment bank / investment company. We have specialized in offering the full range of investment banking activities such as securities brokerage, asset management, corporate finance, and investment banking. And recently, we adjusted our business model to become an investment company, mainly with direct investment in three sectors: financial services, real estate and contracting, and industrial. We're listed on the Egyptian exchange, and we have also an office in Dubai.
Thank you.
Bismillah ar-Rahman ar-Rahim. Fajr Capital is a private equity investment group. We're based here in the DIFC. Our investors come from both the GCC and Southeast Asia. So we have sovereign investors from the UAE, that's the Abu Dhabi Investment Council. From Southeast Asia, we have Khazana Nasional Berhad, which is the Sovereign Wealth Fund of Malaysia, as an investor with us, and also the government of Brunei Darussalam. Since 2009, we've been investing in a variety of sectors. That includes financial services, education, infrastructure, and several other sectors. So we're quite diversified in terms of our sectors. And all of our investments are, of course, Sharia compliant. We typically, in an investment, look for a $25 to $100 million investment on our part. And so the enterprise values of the companies in which we invest tend to be between certainly more than $100 million, and sometimes even in the billions of dollars. And over the past years, we've built partnerships with other firms investing alongside of us. So, for example, in a transaction last year, we partnered with Mumtalakat from Bahrain and Blackstone out of the US.
Great, thank you. So I'm going to start with some questions, and I'm going to encourage my panelists to also interact. And I'd also like to say, if you have questions, perhaps maybe a little bit into our discussion, I'll ask to see if you have any questions. We can take that. I'll start with Simon. We have some sessions here at the event on the Muslim travel market. It's after Islamic finance. Halal food was the obvious sector. And it's starting to be that travel is also, somehow Muslim Islam related. And obviously, Shaza Hotel is a concept that, it speaks to a lifestyle brand. How would you describe this opportunity, for people who are in the hospitality space but don't understand why do you need a product for this audience, i.e. an Islamic or Muslim audience?
Thank you. I think it's very important you mentioned the word lifestyle. This has been overused not just in this segment, but generally within the industry to the extent that it kind of loses its meaning. But for us, it has real meaning. It has cultural meaning. We're celebrating the values of a culture in a very contemporary, luxurious setting. There is definitely a need for this type of offering where the Muslim traveler can feel completely comfortable in their environments. And I'll come back to this in a moment. But if you see a number of factors coming together, His Excellency, I'm sure, will mention the pillars upon which the tourism strategy has been based in Sharjah. And it's a very interesting case study of what they're doing in terms of creating destinations, etc. But it's based on culture and lifestyle, on values, on heritage. And this is what we wanted to embrace as a brand to represent the region. So you have governments with very clear visions of 2020, 2021, of how many millions, whether it be a 10 or a 20 million tourism visitation. Why? It's because it's absolutely fundamental to the economies in the region as part of a diversification strategy away from the oil sector. And this has been even more compounded by the recent movement in oil prices. The governments have realized that the great multiplier that the hospitality sector brings to their economy. So you have that in the background. You have a young, dynamic, high-income, high-spend traveler, which is the Muslim traveler, who are looking for more and more destinations and trying to fit into mainstream hotels, where we will provide them with a luxury product that is completely in understanding, in keeping with their value systems. And behavior forms a lot of that, how we behave in our hotels, how our employees behave. Even the culture of our company becomes very important in how that trickles through the organization. So you have these two factors. You have a market opportunity supported by government and infrastructure, and now you have a hotel brand that can satisfy that demand.
Great. One of the things that perplexes people about Sharjah's concept, and at the end of the day, Sharjah is an amazing lifestyle proposition, a premium proposition, but for an international non-Muslim traveler, it's a dry hotel. It's premium but dry hotel. If I can, Your Excellency Marwan, ask you about the dilemma of the business case of hotels. Obviously, we have a developing success story here, but in general, from a marketplace point of view, there are challenges of acceptability and its viability.
Sure.
How do you see some of this as shaping up for Sharjah in particular?
I might take you out from the subject of hotels to something different. A couple of years ago, if you'd noticed, we didn't even have Islamic banking in the Emirates. We had Dubai Islamic Bank. Today, how many bank doesn't have Islamic banking? And a question to you guys, how many doesn't have Islamic banking? All of the banks, even Mashriq has an Islamic banking. So the trend to Islamic is going to happen, whether we like it or we don't. And hospitality is part of an economy. So how is it possible to convince investors to invest in hotels that are not providing alcohol is always a challenge. And how to get an operator that is well established to operate a hotel in a 5-star level is also a challenge. However, the challenge doesn't mean that it can't be happening. It can happen. Today we see Sharjah entering the market strongly with Kempinski. we at the start in Shuruq, when we started our projects, the whole idea of getting a branded hotel like the Chedi, for example, like the Hilton, like the Intercontinental, like the Four Seasons, everybody thought that it's going to be impossible to get those operators because to get the 5-star, the 5th star is alcohol. And this was this mindset in people's idea that you can't have a 5-star without an alcohol. But that was never a point when we went to those operators. So when we managed to get the Chedis and the big names like the Anantaras and the Shada, they had no issues with alcohol. If alcohol is not acceptable, then it's fine. We are going to work with you by creating a unique offering. And that's something that's so special, is how can you differentiate your offering from the market? If you have something that is so special, you're going to go to buy it. You're going to, if you can offer something that is so special like an iPhone today, people are going to buy your product. And to be investing in a hotel that doesn't provide alcohol, you have more challenges. However, you're always going to be unique by your offering, whether it's from the type of rooms, whether from the design of it, whether from the experience of it, whether it's from the hospitality. It's not about only not offering alcohol. So you have to provide something that is really going to make it special. So when we manage to get those operators that are going to adapt to what is defined as an Islamic offering, then you're going to win in it. And that's what we did in the Chedi in Khorfakan that we're actually under constructing. And Al Bayt Hotel in Sharjah, we have won international awards for the Chedi as the unique resort in Khorfakan even before building it. We have won an award as the best interior design for Al Bayt Hotel because we're offering an old Emirati hospitality experience. An old Emirati experience means that you can't have an alcohol because we are Muslims and we don't consume alcohol in principle. Okay, and that goes also in Al Khan. So in the context of that, we can't offer alcohol. If you want to consume it by yourself, that's good for you guys. But at the end of the day, if a customer comes, we can't offer it to them, but if he gets it, that's a different case. But the idea is how can you create a unique product that will sell for itself? Why would you go to Al Bayt Hotel or Al Khan Resort and not go to Medina Jumeirah, for example, even though they're all unique in their positioning? So how can you convince a tourist to go to your hotel? Is not going to be really difficult if you have a unique offering.
Well, I might just, sorry, interject with that. I'm sorry, just to have the conversation. I think what His Excellency is saying is absolutely spot on in terms of what our experience at Shazar has been. It's been difficult to convince owners and private investors to build hotels with us. Granted, there is a degree of confidence in that we're associated with a major chain, but we're a distinct, separate identity. We are a separate brand to Kempinski and designed that, and that's very important to me that it remains separate. But you have to create hotels, and this is our vision, from the guest experience standpoint, through the architecture, through the concepts, through how they're going to interact within the hotel, and you have to engage as a brand with this market, and that's what's building the loyalty. It's not a question of just whether you have alcohol or not have alcohol. If you don't have alcohol and you're still a bad hotel, you're still a bad hotel. Sure. So it's building great hotels in this space, and that's the exciting element.
So if I can summarize a point here, because people who've been looking at this space for the last few years have been grappling with, is there a business case for this? They've been grappling with how do we deal with, not in being inclusive and being, inviting to everyone and not seem like it's only for Muslims. So yes. I think what we are seeing with Shazza and others that are coming to the market is a positioning that is creating a differentiated, if I can use your word, an authentic product. And to me, it's almost like if it's okay to compare Batil. Yes. As a concept, it's an authentic, high-quality thing. So there is a business case, is your point, and I think we're starting to see success stories, and hopefully the investors will start looking at it. So I'm going to move on, and because we need to also cover food. If Mohammed, if we can understand the food space is so big, right? Food and beverage is a major global industry. It's a staple industry for many economies, especially within the Islamic economies. There are net food importers, there are net food exporters. We have the food security element. We have people who love to eat. So food is a very a very interesting space. You have recently had an experience with the food sector. Could you tell us the interest that Pioneer had in the food and beverage, and and what do you think this space provides? And then, and being it's an Egypt product, so the assumption it's halal, but in general, speaking of the food as a category for an investor, why are you looking at it, or why, how much are you looking at it?
Basically, maybe we decided to go into this investment in the dairy production not because of the halal angle, to be honest. We needed to penetrate this market, the dairy production, as a complementary of our portfolio. Because, as a private equity company, diversity is very important because you need to have this equation, defensive investments and other non-defensive investment to have the complementary equation. But we're talking here about figures, the food business. I'm talking with focus on the Islamic business. As you know, the Muslim population is estimated at around maybe 2 billion. And the food production for Islamic business is worth maybe hundreds of billions of dollars. So I think we should start giving the attention and give more focus on developing this concept, even in Dubai, because for many reasons, mainly to satisfy our local needs, because if you may know that most of the Arab countries mainly rely on food imports. So we need to start developing this concept. Malaysia, as a global leader for halal food business, reported exports at around $10 billion every year. So we're talking about huge numbers here. Also to export to even non-Muslim countries, because you have a huge demand from Asia, specifically Asia, from India and China. So we need to give more focus to this. But when you decide to go and develop this type of business, there are some steps and roles that must be played.
So if I can, absolutely, and I think that makes great sense. Of course, Egypt is a major agricultural and food manufacturing market, and both domestically, but also as a regional brands and regional proposition. When you said, food as part of the mix of the portfolio for an investment firm, what type of what proposition does it bring to the portfolio? Is it short-term? Is it long-term relative to, I think you had said, your real estate and financial services investment? How does food fit into that portfolio? Because
for us,
yes.
for Pioneers, definitely the food business is long-term, because the food business is an industry that will never disappear like other maybe businesses. So we highly believe in this business. We are working on the business enhancement and business restructuring for this company, and to have exposure to other markets, because currently we're having a great opportunity, because as you know, Russia is having sanctions from Europe. So this is a great chance for us to have full exposure to this big market.
So you see food as a long-term investment and a growth opportunity?
Yeah.
Great.
Yes.
Brother Amir, if you can, Fajr Capital, as an Islamic private equity firm, having interests from a fund point of view from Malaysia, from generally in Southeast Asia, and then MENA, how have you looked at these two sectors generally or broadly, and across the value chain, including retail, perhaps?
We certainly have, and we've talked a lot, and I think the figures you gave are very important for the macro picture, because of course the macro view is very important to understand the growth opportunities. However, for investors, we focus on the micro, and we're very much focused on the particular company in which we're going to invest. And the formula that we use is quite straightforward, and that is that we look for three things in a company when we invest in it. First, we're looking for a differentiated strategy. So you want to see a company with a strong strategy. Second, we need to see operational excellence. And third, we need to see the ability to scale. Because of course the thesis in private equity is that our capital will be used to grow the business, and then collectively it'll become more valuable for all the investors involved. So our colleagues on the panel have certainly raised very valuable points in this regard. So in terms of differentiation, I think that this term dry hotel, I don't like using that term, because of course we should not define things by what they are not, we should define them by what they are. And in my view, what's very appealing about Muslim lifestyle hospitality is the scalability point, because indeed family-friendly hospitality, which is how I would look at it, is very scalable, because even people who might consume alcohol or enjoy going to nightclubs will also need a family-friendly experience in their lives as they reach that stage of life or when they're traveling with their family. So I think the family-friendly element is quite important. That's on the scale side, but just to go through the three, as I mentioned, in terms of differentiated strategies, we need to see that in the companies that we look at. Operational excellence, Simon raised the point about the partnership with Kempinski, and that's very important. Muhammad will know, of course, that major MNCs are looking at Egypt now, Whirlpool investing in Egypt, Kellogg investing in Egypt, because they have the capabilities and expertise to run these businesses well. So we're looking for operational excellence either within the management team of the company or through joint ventures and other affiliates. And also Marwan had mentioned that as well, that getting good operators is important. And the third thing about scalability, this is very crucial. So I would like us to be able to say over time that we build our portfolio in these two sectors of tourism as well as food and beverage by seeing companies that are focused on the Islamic economy but also demonstrate the scalability and the investment attractiveness to attract private equity firms like ours.
Great, thank you. I'd like to see if there are any questions from the audience at this point. Nope, okay. So all right, can we have a mic up here, please? If you could just introduce yourself with your name and association. Question. Please direct it as a question. Hang on just a second. Okay, try it now.
Arif Zaman. Just a question, Amir, I'm not sure whether this is a yes or a no, but in terms of the criteria around investment,
Yes.
Is there a particular governance dimension that plays or does not play to these sectors when you make your decision or not?
Certainly, so governance is extremely important, of course, in any investment that we look at. So we want to see a high-quality board of directors. You want to see good governance practices. In terms of these particular sectors, if we look at them, so clearly, when we look at the hospitality sector, when there are partnerships and when one of the partners has a long track record of strong governance and global standards of operations, that gives us comfort to assure us that the operating numbers, the information that comes gives comfort, is reliable and done in a very sterling world-class way. So certainly we like to see that in the hospitality sector. And when it comes to food and beverage, not just in the Islamic, but in general, of course, there are different parts of the food and beverage value chain. So you've got agriculture, you've got processing, and you've got the packaged foods, and of course the service component. Now these tend to be family-owned businesses, and family-owned businesses have a certain challenge when it comes to governance. And as a part of the value that private equity investors bring is to introduce non-family directors, industry experts, independent directors, and the like. So I think that they're not specific to the sector, but certainly to the stage of the life of the company. And especially in the food and beverage space, you do see a lot of family ownership and the need for institutionalization of governance.
Great, thank you. Okay, I'll take one more question back there, and then we'll continue.
Thank you. Assalamu alaikum.
Salam wa rahmatullah.
Habib Ghanem from USA Halal and ISWA Halal certification in Washington. Recently, you know about some issues with food certification. Is there a way that somebody, I know when you go to the hotels here, they just tell you it's halal without documentation, but in places like Malaysia, Indonesia, they have a certificate that they can show. And many people question it. I've been with some people and they don't want to. They prefer to eat only fish instead. Maybe we can devise a system where not just saying halal, but showing some documentation to prove that it's halal. It's a big, difficult issue, but it's something that you should think about. Thank you very much.
So, we have a session tomorrow, and particularly addressing the regulatory standardization, certification stream, which is a very critical stream in the Islamic economy development. From an investor point of view, I guess
What time? What time?
I'm sorry?
Tomorrow. What time tomorrow?
It's on the schedule, but I think let me take that and adapt it to our from an investor point of view. How does this this still a lot of flux? We have halal standardization across food is still in flux. We have over 300 certifiers. There's some good momentum from the OIC now, from the GCC governments and others, where they're coming to some standard, common standards.
Yeah.
But from an investor point of view, having this uncertainty, do you think affects, does that go into an investor's decisioning process, do you think? Mohammed, maybe if you can.
Basically, the halal food, if you're addressing this subject, it can never work without a legal framework as a beginning. So one of the tips for any country that decide to penetrate or to develop this business concept is the government role in issuing relevant rules, standards, and regulations as a legal framework for the business industry in general. The second point is the halal control units that is definitely reported by the government or the country itself. And it has an important and vital role on the continuous monitoring for this business, for specifically the reason that you're addressing. To ensure compliance, continuous monitoring to ensure compliance with hygiene codes, health conditions, Sharia standards. And when you as an investor see all these mechanisms has been taken, you will be comfortable that everything is organized according to rules and regulations and highly monitored and in full compliance with the international measures. I'll give you an example. Many of the Muslims eat food that they think it's purely halal, while it may contain pork or alcohol in the ingredients. I think we all agree about this, okay? So currently, as most Arab countries import food, even candies, not necessarily purely meat or poultry, candies, it is certified as halal by an agency that is in the exporting country, not here. Now, you need to have this halal control units and to start gaining experience.
So if I can, Mohammed, because as I mentioned, there is a lot happening on that front. It's almost confusion, both from multinationals as well as domestic players, especially those who want to export into other Islamic countries, or as most of the Islamic countries are net importers, certainly for the suppliers is a big concern. So valid. My question is, from an investor point of view, this certification thing not being resolved or not coming to some kind of level of common standards, does it affect your decisioning and for investors? Do you think it will impact decisioning?
I have an intake
Sure.
here. We have the Emirates Authority for Standardization.
Yes,
That basically, once they agree on it or approve it, then that they have done their homework for you. So whether it's a consumer or an investor, if you get the approval from ESMA, then you're basically saved and when it says what is halal. But if you're an investor, what we do is we urge you to basically look into it. Go to those factories. We've been dealing with a lot of those outlets that are serving burgers, and they had an issue. They got those certification from different institutes. However, when ESMA went there to approve it, they found a lot of issues. So if an investor, keen investor, willing to invest in the food industry, you really have to take care about those authentication of those approvals. But at the end of the day, the market is so huge. You have more Muslims growing all around the globe. You have more awareness about people of what is halal and what is not halal. You have people that are accepting halal food for non-Muslims also, which means that the future is growing for the halal industry, whether it's food or whether it's hospitality. It's the matter about investing more in the halal classifications or standardization. That is the future of it. And from my point of view, I think for an investor, you really have to go through it and check it out, because the definition of halal food has a lot of definitions from different entities.
Sure, and we have, the various standards from Malaysia and from the GCC versus Turkey and other places. There are variations, but hopefully as OIC and others are standardizing and coming to a common cross-standards compatibility, that things will improve. Thank you for sharing that point, and that is a very important consideration. So net-net, we hope that this gets resolved faster, meaning a lot of the variations, because it becomes a consideration possibly in investors not thinking about it twice. Amir, OIC countries, the Islamic countries, which are the 57 Muslim majority countries, 89% of meat is imported. Their meat consumption, 89% as of last year, from a trade data point of view, is imported. Biggest suppliers being Brazil or Australia or US and France and so forth. So they are, to them, this is a market. That's why they have to follow ESMA or JAKIM, whichever country standards is. My question, Amir, as a Islamic private equity investor, as someone who's looking at industries, why not go up the value chain? Why not invest in abattoirs? Why not invest in where the supply chain starts? We're starting to see some deals. Abu Dhabi had an investment in one of the major abattoirs in Brazil, but why is that not happening more, or have you looked at those kinds of opportunities?
Sure. Well, I think from an institutional investors have different types of mandates, depending on who they are and what their purpose for creation is. So there are some strategic investments, as you said, that are around food security, protection of imports, which are very important. And there are institutions that are set up to do specifically those types of strategic investments that will have impact on the national economy and support the long-term stability of the economy. So that's quite critical. As a private investor, of course, we focus on the financial prospects of a particular transaction. And so what we've seen in our experience in that space is a fairly significant number, in fact, of greenfield opportunities. So new businesses, new ventures attempting to address this problem. And for a lot of private investors of our category, greenfield investments are less attractive because they lack some of the features I talked about before in terms of proven concept, track record, et cetera. So that's why I think the private capital might be a little bit more reluctant to currently go in, but certainly there are institutional investors who might want to come. And certainly I would say that, as you talked about where the current source markets of this meat, joint ventures, partnerships, affiliations, where they might want to come closer to their export markets, that would be very attractive to firms like ours who would want to see, okay, this is an established operator who's coming to, say, the MENA region, and they're looking for equity. We would look at that differently from a pure greenfield operation.
Sure. I mean, I'll come back to that because just to do a plug-in of the portal that was announced early in salamgateway.com, later on in the month, a dedicated report on M&A activity in halal food space will be released. So one of the data points in that upcoming report is In the last 3 years, about 70 M&A deals were identified directly related to halal meat, with an aggregate value of about $2.1 billion. 86% of those were by corporates, and 14% by private equity. Comparatively, globally, over 500 such deals happen with over $100 billion worth of transaction. Although, to be fair, it's wider food and beverage sector, not just meat. There's a big disparity in global investing in food and agriculture in general, and our region's investment in or the halal space. Right? Is food as a category relative to other sectors? How does that fit? And is there a disparity between global investment firms' appetite in this sector versus our regions? Mohammed, if you could.
Let me give an answer for this question. This is a very professional question. Most of the transactions that are relatively big in the food industry is performed by international brands. And the international brands or international manufacturers have confidentiality for their production. So they are sizable, and they do not need private equity investors because it's not a greenfield business.
That's right.
They are sizable. They want to access a market to be closer to this market and to be closer to neighborhood countries. For example, this Brazilian food, this is the second bigger producer of meat. And it already exports 70,000 tons, if I remember, on a monthly basis to the region. So if they come here to Dubai and they have their own facility and relevant logistic company, they will be closer to the market, and they will be closer as well to North Africa, Egypt, Tunis, for example. This will give more credibility. If I buy this, for example, chicken that is produced here in Dubai, for me it's more credible. Most probably it will be cheaper. And the validity and expiry date also should be considered. Then take it from Dubai rather than waiting to be imported, to importing this product from Brazil. And that's it.
Great. So, in terms of the, you're saying the proposition is of more interest to the corporates, the industry players, yes, for that reason of scale. Although I would have some questions back because we within the region have some major food manufacturers. When we look at the companies at the scale of Savola or Al Marai and here IFCO and so forth, I mean we're talking a multi-billion-dollar annual revenue. So I mean I think I could flip that question, but I think fair point. Today, I think your point is today we see that most of the activity from multinationals.
Financial investors, maybe. Yeah. These are financial, not strategic investors.
Sure. Okay.
I have a take on
yes.
it here. I think the food industry was never something that was considered important economy factor in the region due to the fact, I'm talking about the GCC countries where we are oil-rich countries.
Right.
And the only country that have invested in the food industry was the Kingdom of Saudi Arabia, where they have invested a lot. The issue about food is water, and water is scarce in this part of the world, as you are all aware. So investing out of the GCC for the food industry is the better deal, but acquiring the right partner is the toughest question because usually they are very well established and they're not offered in the market. And all of the GCC investments that try to go out of the GCC countries and specifically to Sudan, for example, or Mauritania or Morocco, they all failed. There wasn't the right factor to make it a successful investment. And that's the issue that we are facing here. But if we talk about a bigger scale here, about the whole Islamic world, we don't really need to invest in the food industry in the region.
Right.
We can invest in anywhere, wherever it fits our economics. And I think the major sector here is we need to acquire and we need to establish new entities that are into the food industry in the other areas where it is economically viable for us to invest.
Thank you. coming back to travel, I guess I was getting hungry, so started focusing a lot on food. But coming back to hospitality, what's the business case for Shaza when you went to the investors, or I mean, to many it's still a surprise that Shaza as a business case is thriving. You're able to attract project financing. You're able to attract investment for a project that has this product differentiated product proposition. Could you share with us, what's what the returns? What's your business case to the investor?
From the business case standpoint, one should never build a business on an emotion. There are fundamentals, and we're the same as any other business. To be honest, the original vision was to actually invest in properties themselves to flagship the brand. For whatever reason, that wasn't as successful, so we had to attract third-party operators. We currently, by the end of this year, will have 14 hotels on the development, 14. So from a very slow start, some of the debates that we're having of convincing owners not to go with a recognized mainstream international brand, but to come with us, I'd admit it was difficult. And what we've seen is a very interesting transition in the profiling of our owners. The original attraction was more emotive, that an investor who was going to build a hotel wanted an operator who wasn't just going to operate a so-called dry hotel, but as a brand as a whole, basically embraced his values. And that's where it started. So our first few hotels started in that manner. But now what we're seeing is that we're being backed by some major institutional investors, including one of the biggest Islamic banks out of Saudi Arabia, who has actually brought us hotels to operate for them under straight management agreements. In terms of the business case, we have to have the same financial discipline in a Shazar hotel as a Four Seasons, a Hyatt International. Otherwise, we wouldn't attract the investors. The fact of the matter is, because of our ability to own this market space, we foresee the ability to actually increase returns, not because we're losing the revenues from beverages. That's never the core business of a hotelier. So being very good as an operator, getting rate premium in a demographic segment that traditionally actually has a higher spend per diem. From the Shazar business case, our objective is to get up to a minimum of 20 hotels in operation by 2020. We have actually a very high earnings base per hotel when compared. As I said, I've worked for other international chains, and our actual average fee earnings per property is actually much better than I've experienced in the past because of the strength of our market positioning. So I would anticipate the investors in Shazar hotels will be looking at IRRs in excess of 30% at some point in the future. Would be my objective to give that return. And now that we have these hotels opening, we have 3 opening next year, the more successful you are in the market, the more attractive you become to additional investors who now see that there is a compelling business case.
That's great. I think I would like to end on that high note. And it was a few years ago with this concept of Islamic economy and halal market, and people were questioning, and is it just emotional? But now, alhamdulillah, we're seeing real success stories with high business case and successes, not only in the case of hospitality, but even on the food side. Although we don't have representation, there's another session where Nestle is. Nestle last year did about $7 billion in halal certified food business. Carrefour has introduced in Europe their own halal product lines, so they're investing in this space. So multinationals are already seeing it. I really hope our regional players also start seeing in that space. But overall, I think I'd like to thank and wonderful panel. I'd like you to
Thank you.
please join me in thanking them for its insightful input. Thank you
so much.